I have been in trading for 10 years, and in this video I want to share all the observations that I noticed during all this time. I hope you subscribe to my channel, because I try to give you the highest quality information. The video is more conversational, so sit down more comfortably, pour tea and listen very carefully. This is an invaluable experience. The past 10 years are an occasion to compare the theory of Forex trading with practice, to share your unexpected observations on what things work, and what dogmas bring dubious benefits when using them. Trade against the trend. One of the basic principles of market theory encourages traders to trade according to the trend. 10 years of observations of the Forex market show that the majority of participants trade in the opposite, counter-trend direction. This issue is discussed in more detail in a recent article on the site, which describes the strategy of trading against the crowd. A prolonged rise or fall in the currency makes most traders confident that the trend will soon reverse. Instead of fearing a loss, they are driven by a desire to enter at the top or bottom of the market. Any minimal correction of a strong trend leads to a wave of deals of the crowd, driven by the fear of being late for a reversal. In real life, they are knocked out of the market by the next wave of purchases or sales in the direction of the main and obvious trend. Observations of the indicators described in the article by the American broker OANDA, reflecting the open positions of traders, proved the persistence and systematic nature of this error. Don't be a crowd, follow the main trend. Do not use the concepts of high, low exchange rates. It is better to build a strategy on this knowledge or find a profitable trading system that follows major trends. In this case, a high time frame and proper money management guarantee the trader a long-term profit. Bitcoin is a prime example of the futility of arguing with an obvious trend. You can treat cryptocurrencies differently, but in 12 years the value of BTC has grown to $59,000. The increase in value was accompanied by a constant expectation of a fall in the digital asset, accusations of a bubble and insolvency. Now the volume of Bitcoin has grown to 10% of the world's gold reserves, exceeding the money supply of the ruble and the Korean won. Martingale and Grid's rule on Forex. Grid strategies. Averaging a losing position or martingale, which provides for an increase in the volume of such transactions, are considered by many to be unacceptable methods of working in the Forex market. On the Trade Like a Pro website, almost all the first articles on expert advisors were provided with such warnings. Talented programmers and traders of our forum have been able to prove over these 10 years that with the right attitude to such strategies, you can get stable, profitable systems. For example, here is a list of the best Forex expert advisors in 2021 with the results of work, which included robots that use martingale. In the section of the Robotist site, there are grids with a profitable work duration of more than 5 years. Averaging tactics only work in the Forex currency market, which, unlike stocks and cryptocurrencies, tends to return to the average, to trade in large ranges. This allows traders to withdraw trades to zero on pullbacks by increasing and averaging the total position. How much of the averaging element can be introduced into your strategy, everyone decides for themselves. If someone plans to completely switch to automated martingale, there are many articles on this topic on our website and forum, where both simple and very complex expert advisors are posted for free. As for the level of distribution of grids and martingale in the Forex market, these strategies can be seen in most managers of the PAM account service, including those who occupy the first places in the rating. Averaging is also used by traders of large prop companies, according to the testimony of the talented Tom Dante. Night scalping is one of the most popular strategies that allows you to earn in the sideways direction, which occurs due to the absence of major players in the Forex market at this time. 10-year observations of advisors who support such tactics show the periodic failures and ups of this strategy. As a vivid example, we can observe two different strategies: a breakout based on pending orders above, below the trend direction, and trading in overbought, oversold zones in order to catch a pullback. At the beginning of the year, as after any local crisis, breakout strategies bring a decent profit due to the increase in volatility and the number of impulse movements. Right now, when the crisis is beginning to fade, the all-in strategy is working, although some time ago it was useless. Do not give up the advisor, which brought the trader a medium-term stable profit. If the strategy's performance deteriorates, it can be transferred to a cent or demo account. Watching the trade statistics, you can see the changes in a year, 2 or 3, and then transfer the robot to the main account. A decade-long observation of the forum showed that users pay the least attention to published articles on the psychology of trading. However, the content of the material on this topic affects only the emotional component, fear, greed, etc., and discipline. In reality, working on Forex and even developing your own business can be hindered by childish psychological attitudes. From an early age, the topic of money and earnings is associated with something bad, which ultimately leads to the emergence of subconscious barriers. Such childish attitudes can make a trader shy of profit. In his opinion, earnings cause pain to the trading opponents who have lost money. Another option is that the trader does not believe in high profit strategies. This is a common example. Each of us was brought up differently and has its own phobias that can prevent profitable trading in the Forex market. Of course, they cannot be described and taken into account in books on the psychology of trading. Moreover, the trader is not always able to identify them independently due to the fact that many of these attitudes form the basis of his worldview. However, they affect how he makes trades, takes a profit, sits out in positions, ignores the stop, etc. The step-by-step method of Dr. Caroline Leaf will help you to tune into positive work and get rid of the harmful psychological aspects that interfere with trading. It is described in the book, which in the Russian version is called Turn on Your Brain. The author's 5 steps consist of the following steps. Learn to diagnose problems that prevent you from thinking positively, which can be calculated if not emotionally, then physically. A trader can expect each trade to close on a stop, emotionally exhausted after each entry. He may not be aware of negative expectations, but his body will be tense and his movements will be stiff. Awareness and analysis of the identified problems. The trader should use the questions asked to himself to understand the reasons for the tense state. For example, if the strategy is profitable, you need to realize the low probability of a negative outcome of each transaction. If a trader is in a state of euphoria, for example, having received 3 profits in a row, he needs to be reminded about the possibility of getting a loss, so that the triggered stop loss does not drive him out of himself. The talented journalist Edwin Lefebvre, whose name became widely known thanks to his work, Memoirs of a Stock Speculator. However, he has another, less well-known, but also very interesting book, The History of Wall Street, in which he described in detail the stock exchange of the late 19th, early XX century. When reading this work, even after more than 100 years, it is easy to find parallels with today, not only in Forex, but also in the cryptocurrency market, which was difficult to imagine in those years. Such a work is interesting to read when a trader finds himself in an unfamiliar situation in the market. For a beginner, this knowledge will help you compare theory and practice. The actions of the market during the global economic crisis can be understood by studying the previous downturns. In principle, the very presence of candle analysis, graphical figures, and various patterns proves that everything that happens to the market now will be repeated many times in the future. The video is too long. I have a trading session ahead of me, so please like it, subscribe to my channel, be sure to leave your comment on the video and I will release the second part. For now.